The US financial markets are currently in the throes of a breathtakingly rapid and chaotic upheaval. Just the other night, US stocks plunged again, their trajectory resembling a wild roller coaster ride plummeting downward. The US dollar fared no better, plummeting like a kite with a severed string, crashing through the 98 mark at one point. This turmoil has sent shockwaves through global financial markets, disrupting the entire economic ecosystem. Donald Trump bears a significant share of the blame for this chaos. His unrealistic tariff policies have been nothing short of reckless. Since China led the charge in retaliation, other countries have swiftly followed suit, sparking widespread concerns about the future of international trade. The question on everyone's mind is, how long can global commerce survive under such conditions? As a result, the value of the US dollar has taken a hit, and market confidence in it has been severely eroded. Not content with the chaos he's already caused, Trump then pressured the Federal Reserve to cut interest rates. When the Fed refused, he flew into a rage and even called for the removal of its chair. What he's attempting to do is nothing short of undermining the Fed's independence, a cornerstone of the US financial system. Think of the Fed's independence as the load-bearing pillar of a house. Without it, the whole structure risks collapsing. Trump's actions have injected a toxic cocktail of uncertainty into the market, and combined with his notorious unreliability and unpredictability, it's the perfect recipe for disaster. All these pressures have culminated in the latest triple meltdown of stocks, bonds, and the exchange rate. The situation has now reached a critical juncture. US stocks, bonds, and the dollar are like three precarious mountains on the verge of collapse. If the downward spiral continues, a financial implosion could occur at any moment, which would almost certainly trigger an economic crisis. Given the US's central role in the global economy, such a crisis would have far-reaching consequences, dragging down economies around the world. No one would be spared. One would expect that, as president, Trump would step in to calm the markets, revoke the policies causing this turmoil, and restore stability. Instead, he's doubling down, pouring fuel on the fire. He's taken to social media platform X to launch vitriolic attacks on Fed Chair Jerome Powell, behaving more like a ranting fishwife than a world leader as he demands rate cuts. But it gets even more astonishing. Starting this week, Trump has proposed bringing independent agencies like the Securities and Exchange Commission (SEC), the Commodity Futures Trading Commission (CFTC), and the Federal Deposit Insurance Corporation (FDIC) under White House oversight. Under this plan, any rules these agencies want to introduce would need prior approval from the Trump administration. Even the Federal Reserve, while maintaining some independence in monetary policy, would see its banking regulatory rule-making subject to White House review. This move has seismic implications. In the US, a country built on financial capitalism, where financial capital traditionally operates with significant autonomy, Trump's plan amounts to a power grab, an attempt to subjugate financial capital under political authority. If successful, it would fundamentally transform the US economic model, shifting from financial capitalism to something more akin to state capitalism. Trump may even fancy himself the new Franklin D. Roosevelt, but if he takes things to an extreme, there's a terrifying possibility of veering towards a more ominous path reminiscent of historical figures like Hitler. News of these proposals has sent shockwaves through the financial world. The idea of the government declaring war on financial capital is unthinkable to many. Financial capitalists won't go down without a fight, and a showdown between the government and financial interests now seems inevitable. Trump has well and truly stirred up a hornet's nest, placing himself at the center of a maelstrom. So, why doesn't he back down? The truth is, he's trapped, riding a tiger he can no longer dismount. During the Biden administration, government spending spiraled out of control, depleting the Treasury and ballooning the national debt to a staggering $36 trillion. Since taking office, Trump has tried every trick in the book to cut costs, from pressuring Elon Musk to lay off workers to the absurd proposal of selling immigration gold cards. Yet, all his efforts have only yielded a meager $150 billion in savings. In contrast, the annual interest on US debt alone stands at a colossal $1.1 trillion, with $6.5 trillion in debt due for refinancing in June, followed by another $3 trillion in the coming months. The debt burden is crushing. Trump hatched a grand plan, believing that an aggressive tariff war would extort huge sums from other countries, force them to buy US debt, and scare investors into shifting funds from overvalued US stocks to the safe haven of US bonds. If it worked, it would be a double win, boosting government revenue and driving down bond yields, since bond yields and borrowing rates are closely linked, allowing for cheaper refinancing of debt in June. But he grossly overestimated the might of the US and the dollar, stuck in the mindset of his first term. His plans were derailed by China's firm counter-measures. Once China led the resistance, other countries followed suit, leaving Trump's tariff war in shambles. Not only did he fail to rake in any revenue, but he also severely damaged global confidence in the US and the dollar's credibility. The most immediate and terrifying consequence looms large: the June debt refinancing. If the current trend continues, there's a real risk that no one will buy the new bonds, triggering a catastrophic default. Even if there are buyers, the sky-high interest rates would cripple the government's finances. Caught between a rock and a hard place, Trump sees only one way out: forcing the Fed to cut rates. Lower rates could stimulate the economy, increase liquidity, and most importantly, drive down bond yields. It's his last-ditch effort to survive the June debt refinancing ordeal. But the Fed isn't biting. Its official stance is about inflation concerns, but the real fear is that rate cuts would trigger a mass exodus of capital, crashing the stock market and further destroying the dollar's credibility. The Fed and the financial interests it represents aren't willing to sacrifice themselves to bail out Trump, especially when doing so would mean shouldering the blame for the impending collapse of US assets. They are political enemies of Trump, each desperately wishing the other would step down. For them, sacrificing themselves to save Trump is tantamount to walking willingly to the guillotine. They'd much rather watch him fall from power. From the Federal Reserve's perspective, this seems like the most viable solution. After all, the risks accumulated in the US financial market have reached a perilous tipping point, and the situation appears almost beyond salvation. The question now is, who will bear the blame? Although these risks were collectively created over many years, and the establishment and financial capital bear a significant portion of the responsibility, they are determined to avoid taking the blame. Thus, according to their original plan, the Fed aims to delay the inevitable for as long as possible. On one hand, they hope to see if the situation will change and whether a way to reverse the trend can be found. On the other hand, they intend to set traps for Trump. Since Trump has just taken office, if a financial collapse occurs too soon, he will surely shift the blame to the Fed and the previous Biden administration. But if the crisis is delayed and still inevitable later, when Trump has been in office longer, it will be much easier to pin the blame on him. However, Trump's tariff war has turned what was once a manageable debt refinancing issue in June into an almost insurmountable problem, likely accelerating the timeline for a financial collapse. But for the Fed, there's a silver lining. Since Trump himself caused this mess, as long as they can firmly fasten the blame on him, the timing of the crisis sooner or later matters less. This is the perfect opportunity to kick a man when he's down and lay all the blame at his feet. Hence, the Fed stands by, watching Trump flounder. This leaves Trump cornered. So, what's his response? He's resorted to publicly and aggressively pressuring the Fed to cut interest rates and simultaneously pushing for enhanced financial regulation. His actions have a two-pronged strategy. First, if the Fed succumbs to the pressure both from public opinion and political oversight and decides to cut rates, it could ease the debt refinancing crisis in June. However, given the current state of the US economy, even if rates are cut, the stock market will likely crash, capital will flow out, and a financial collapse may still be inevitable. But then, Trump can shift the blame entirely to the establishment and financial capital, arguing that they are the true culprits behind the situation. Second, Trump anticipates that the Fed won't yield easily, yet he persists in his pressure. Trump's success in politics stems from his adept manipulation of populist sentiment. He knows exactly how to shape public opinion. By constantly and prominently linking the Fed's refusal to cut rates to the impending financial collapse, if the Fed still holds firm and the debt defaults in June, he can convince the public that the Fed's inaction caused the economic crisis. This tactic is effective precisely because most Americans lack in-depth financial and economic knowledge. Repeating a false narrative enough times can make it seem like the truth to them. If Trump keeps hammering home this logic, when the crisis inevitably hits, he can smoothly shift the blame to the Fed. For Trump, the truth matters less than public perception. Though he may be an amateur in economics, he's a master in the art of spin and propaganda. If the public believes the collapse was the Fed's fault, Trump won't just escape blame, he could turn the crisis to his advantage. Enraged and bankrupt citizens will take to the streets, demanding justice, and Trump's earlier move to bring independent financial institutions under government control will then align with public demands. This would present Trump with the opportunity to subdue financial capital. Remember, capital thrives on order. Without it, it's vulnerable. In the aftermath of an economic crisis, if Trump can successfully unite political power with the will of the people and target capital, financial capital will have two choices. The first is to submit, acknowledge Trump as their leader, and relinquish their wealth, for example, by accepting heavy capital taxes and ceding control of the Fed, which would effectively shift the US back to state capitalism and earn Trump the reputation of a new Roosevelt. The second option is resistance, but a cornered Trump might incite populist sentiment, potentially leading to a situation where Jewish financial elites face a modern-day equivalent of Kristallnacht, and the US rapidly descends into extreme nationalism, with MAGA Make America Great Again morphing into a new form of fascism and Trump becoming a modern-day Hitler. This explains the logic behind Trump's recent aggressive stance against the Fed and his push to bring independent financial institutions under government control. On the surface, his actions seem to exacerbate market panic and hasten the financial collapse, but in reality, they are strategic moves to prepare for a potential comeback after the crisis. A century ago, the Great Depression led to Roosevelt's rise in the US, securing his place in history, while in Germany, it paved the way for Hitler's ascent and brought global catastrophe. The impending economic crisis is bound to reshape the US fundamentally. It remains to be seen whether Trump will emerge as America's savior or its destroyer. Then again, he may end up like Herbert Hoover, a failed president. After all, the financial elite can anticipate Trump's moves just as well as he can anticipate theirs. Trump may hope to deceive the powerful financial interests and overcome the odds, but these seasoned financiers won't be easily defeated. They'll do everything in their power to prevent a repeat of the hardships their predecessors endured a century ago. That's likely why Trump recently backtracked on his call to remove Powell. But let's not forget, Trump is notorious for his inconsistent statements and lack of credibility. His words are as fleeting as a child's play, easily changed to suit the situation and his self-interests. If a compromise isn't reached and Trump runs out of options, he may very well take one last, desperate gamble. So, this battle is far from over, and the situation remains fluid. Only time will tell how this high-stakes showdown between the government and financial capital will unfold.